Hello and welcome to another update video about Solana. We want to start on the larger time frame. Here the idea is that we are currently in a fourth wave correction. That hasn't actually changed. This fourth wave started around the 23rd of November, and what we often see is that a wave 2, which unfolded between the 5th of August and it's not the 5th, between the 8th of August and the 6th of September, that a wave 2 and a wave 4, which as I said started around the 22nd, 23rd of November, these often tend to have a similar length, at least, sometimes even the same length, even though of course it's not a, it's not a prediction, it's just the best, let's say, time relationship we have. And if we just assign a box that shows the length duration of the wave 2 to the current wave 4, then it points towards the beginning. 1 second, let me just double check that. Oh, it's not 100% accurate. Okay, so it's pointing towards sort of the 21st, 22nd of December, plus minus a few days, right? So I'm not saying the correction will complete there, but I'm just saying we haven't even exceeded the length and duration of wave 2. So it might go a little longer, and actually a wave 4 could easily, and they sometimes do that, extend further than a wave 2, because wave 4s are often sideways corrections, so they take a little bit longer, because if a wave 2 is corrected over time, or no, a wave 2 corrects the previous rally over time, whereas a wave 4 corrects the previous rally over time. Did I say that correctly? The wave 2 corrects the previous rally over price, and the wave 4 over time. Typically. It's not a rule, it's just what often happens, right? That's why a wave 2 is typically a so-called zigzag correction. These are typically sharp and swift. Well, we've seen that. And the wave 4 is more sideways oriented. Yeah, kind of, but it's certainly not as sharp as the wave 2 was, especially that last leg down. But we'll see. I mean, again, it's not a rule, it's a guideline of alternation that you might know if you are familiar with Elliott wave. The idea is that once this wave 4 is over, we should continue the move up in wave 5, and that would be wave 5 of 5. And this correction is characterized by overlapping price structures. That's good to see, that's what we want to see. Why is that important? Because it means the bulls haven't gone, they are still there. Definitely the bears aren't clearly winning. There's a price channel here that we're following, in which we still are. So nothing, we haven't fallen out of the channel. We haven't even broken support. We've just entered the support region for wave 4, which is located between $220 and $163. Next support levels are $196 and $179. What we're watching for is a reaction in this area, and this is only from a daily, from a macro point of view, and then to start the 5th wave up. That's what we're watching for. Looking at the smaller time frame then, this is really just a smaller time frame. You see here this initial decline that happened in an A wave. That's the idea, right? That we are still in this wave 4 correction, just because it could still extend easily a little longer. We could have completed wave 4 already. That would have been the low from a few days ago, around the 10th of December. But if that's the case, then I would need to see a break above that key pivot there next, above $272, and I need a reaction to that micro support area. Just a reaction to micro support between $209 and $222 is not enough to confirm a third wave rally breakout, because I can easily make a case, and actually I'm watching for that larger ABC here in wave B before we go down, because this move up from the 10th of December looks a little bit like a 5-wave move up. Whenever there's a 5-wave move up, it indicates there should also be another move up. But we need a reaction to this micro support, which is located between $209 and $222. Any sustained break below 209 would rather indicate we're already in the C wave. But careful, if this here is an internal B wave pullback, these only get weak support normally, right? So Fibonacci areas offer only weak support for B waves, which means that it could easily break and recover like a double bottom. Support is not an invalidation point. The invalidation point, a bit difficult to say, a B wave doesn't really have one, but typically we don't want it to sustain below the 78.6 retracement. So it's kind of a very important level, but as I said, it's not an invalidation point. It might go a little lower in the short term. But we're watching here for a reaction. At the moment, I'm tracking this as a WXY structure, and a rally above the last high around $227.50 would be an indication that we've already bottomed there. That's the update about Solana. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye bye.